Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us live from the CME in Chicago. Tim, hello to you. Great to have you with us. An interesting day, certainly, because we've been looking very much to that $50 a barrel level as really this psychological level that we were either moving closer to or further away from. And now we have seen energy stocks tracking oil prices lower. This, of course, off the back of that Libyan oil field coming back online, essentially.
Hey, nice to be with you today, Natalie. Yeah, I mean, you're absolutely right. I mean, the narrative kind of behind the crude oil market has actually gotten relatively favorable. As we saw a better non-farm payroll number on Friday, we've seen, global demand forecasts from Goldman Sachs, indicate better than expected demand figures. News stories of China now becoming the largest crude oil importer, taking the place of the United States, has all been received favorably and has really kind of helped create a more bullish narrative. But the Sharara oil field coming back online has kind of added a little bit of negativity into that story, and it's kind of reminded us all that supply is still a big burden, and we're going to need some action out of OPEC this week really to, I think, change that narrative for the intermediate and longer term.
So, I mean, with that in mind, in terms of that action that you suggest is needed from OPEC members, I mean, in an ideal scenario here, Tim, what would you like to see happen?
Well, I mean, I think what the market is hoping, and frankly, based on the price action, expecting, is that, we're going to see some curbs on United Arab Emirates as well as Iraq, as their compliance levels have been, substandard, and has caused a lot of concern for market participants. But I also think if they were able to codify what they were verbally agreed to weeks back, relating to output levels of Nigeria and Libya. So far we're pretty much looking at a verbal agreement, but I think something in writing I think would definitely pacify a lot of the concern that a lot of market participants have. So I think one set or the other, but both would clearly be very helpful.
We were also chatting just a short while ago with Bob Iacchino from Path Trading Group that in terms of the feed-through effect that we do see from this oil price action, if we consider even your regular consumers, even the healthcare space, and to his mind, he was also pointing to possible future concerns that this could create for airline stocks also.
Yeah, I mean, on the consumption side, yeah, I mean, it's really interesting. I mean, for years, all we talked about was how, higher crude oil prices, and the negative effect that has on GDP and standards of living and what have you. And, as the U.S. has played a more dominant role in the production of energy, especially crude oil with U.S. shale, we began to get concerned about, the price of crude oil being too low and the impact that's going to have on, U.S. stock indices and what have you. But yeah, I mean, prices moving higher, any transportation company, whether it be airline or trucking company, energy is used in all types of industry, whether it be pharmaceuticals or plastics. So a big move over 50, yeah. I mean, I think the various sectors that make up the broader indices, certain sectors are going to benefit from that. Other sectors are going to be harmed by that. So, the market's got to get over 50 first and be able to hold that. And frankly, Natalie, I don't personally expect to see a dynamic move over 50 that will hold going into the end of the year.
No, certainly that forecast lining up with what we've heard from the likes of Phil Flynn from Price Futures Group also, and several other commentators that we do speak to here on the Business Channel. We will have to leave it there, but great to have you with us this morning. Thank you.
Hey, thank you, Natalie.